Assalamualaikum warahmatullahi wabarakatuh. Before we start, we like to thankful to Miss Aminatul Hawaria to teaching us gratefully. Now, I would like to introduce our team members. First presenter is Zaida binti Mak Yunus. Second presenter is Siti Kamarina Sufiah binti Jaafar. Third presenter is Khairun Adlina binti Muhammad Zamri, and the last one is me, Shamimi binti Zamzam. I will pass the next slide to Zaida binti Mak Yunus.
My name is Zaida binti Mak Yunus. Now I want to share you all about a definition for inflation. Inflation is a rate which a general level or price of goods and services rises, leading to decrease in the purchasing power of a currency. Essentially, when inflation occurs, each unit of the currency buy fewer goods and services than it did previously. Thank you. We continue about inflation for Thailand. Okay, as of late 2024, Thailand inflation rate is low, with a November rate is 0.95%. This is slightly higher than the previous month, but still below the Bank of the Thailand target of 1 and 3% only. The rise in inflation is main due to higher food and energy price. The core inflation, which include unstable item, also saw a small increase. The government is considered further interest rate cut to boost the economy. Although his decision is up to the central bank, the Bank of Thailand had already lowered interest rate yearly in the year to help economy recover. Overall, inflation in Thailand is expected to remain lower, and the central bank is focused on maintaining price and stability while supporting growth. Thank you.
The inflation rate starts at 0.52 in January and gradually declines in 0.39 in May. This period reflects a steady decrease, possibly indicating reduced economic pressure or successful short-term policies. Starting in June, the inflation rate begins to rise again from 0.36 to 0.62 in August. This rise should be attributed in increasing demands, seasonal factors, or higher energy prices. The inflation rate stabilized at 0.77 in September and October and slightly rises to 0.8 in November. This consistent increase indicates persistent inflationary pressures, likely due to supply chain issues, energy prices, or rising consumer demand. So the implications is the policymakers might need to intervene with fiscal or monetary tools to prevent further inflation increases. These seasonal trends and external economic factors could play significant roles in these fluctuations. So, the issues related to the inflation rate in Thailand has two issues, that is negative issues and positive issues. Okay, for the negative issues related to the inflation rate in Thailand is inflation reduced the purchasing power of money. It caused each unit of currency to buy fewer goods and services. Basic necessities such as food, housing, transportation, and healthcare become more expensive, making it harder to maintain the same standard of living. For example, if rent increased from $1,000 to $1,100, housing prices rise by more than 10%. To offset this increase, individuals may need to ask for a salary rise or look for a new job. Besides, inflation in Thailand affects business and investors because it increases in operational costs. The rising prices of raw material and energy force companies to raise prices or reduce profit margins, Cost of living pressures lead to demands for wage increases, raising labor costs, unstable market demand. So, consumer purchasing power declines, it affecting demand for goods and services. Consumers delay purchasing non-essential items, leading to fluctuating sales. Business need to take strategic steps to manage risks and adapt to the challenges of the inflations. Okay, the positive issues related to the inflation rate in Thailand is encouraging asset price increases. Inflation often drives up asset prices such as real estate, stocks, and various other forms of investment. This increase in price benefits assets holders as the value of the property rises. This phenomenon can trigger a wealth effect, where individuals feel wealthier and are more likely to increase their spending and investment. For example, property owners who see the value of their home increase may be more inclined to invest in additional properties or increase their spendings. Secondly, it can reduce the real debt burden. Inflation also has positive effect on reducing the real debt burden for individuals, business, and governments. When inflation rises, the value of money that needs to be repaid in the form of debt decreases. This means that the amount of money needed to pay off debt in future is lower in real terms, especially if the inflation rate exceeds the loan interest rate. Therefore, inflation can help reduce financial pressure on debtors, such as governments attempting to manage national debt.
Hello everyone and welcome to our presentation on inflation in Thailand. Inflation is a key economic issue that affects many aspects of a country's economy, and in this video we will discuss the impact of inflation on Thailand and the policies the government has implemented to address this challenge. Now let's explore the impact of inflation on Thailand. Inflation has several economic impact on Thailand. First, it raises the cost of living. For example, in 2023, the price of rice increased by 4.2% and electricity bills rose by 3.51%. These are essential that many Thai families rely on daily. Second, to control inflation, the Bank of Thailand raised interest rate from 0.5% in 2022 to 2.25% in 2023. While this helps curb inflation, it also makes borrowing more expensive for business and consumers. Lastly, inflation affects lower income households as they spend more on basic needs. For example, a 10% rise in food price hits a low income family much harder than a wealthy household. Inflation also impacts key sectors of the Thai economy. In agriculture, farmers face rising costs for seeds and fertilizer, which push up for price. This in turn contribute to a 0.35% inflationary impact in 2023. Similarly, Thailand tourism sector, a vital contributor to GDP, is affected by inflation. Higher price for goods and services can make the country less competitive as a tourist destination. As you can see, this is a graph of impact and trends in Thailand. Rice price index. This is reflecting the effect of inflation and agriculture products. Second is electricity price, contributing to higher living costs. Third is interest rate. The Bank of Thailand's gradual increase in interest rate to control inflation. And lastly is tourism recovery, highlights an increase in international arrival, showcasing this recovery despite inflation challenge. I want to share additional impact of inflation in Thailand. Thailand's inflation is also influenced by global factors, rising food and fuel price. Global commodity price hike, particularly for food and oil, have increased import costs. Currency depreciation in 2023, the Thai baht depreciated by about 3 to 5% against the US dollar, further exacerbating the cost of imports. Thank you. So, What is the Thai government doing to address inflation? The government can take several fiscal and monetary measures to control inflation and mitigate its negative effect on the economy. To manage inflation, the government and central bank have implemented various policies. On the monetary policy side, the Bank of Thailand raised interest rate to 2.25% in 2023. Additionally, they stabilized the exchange rate of the Thai baht, ensuring import goods like fuel and machinery don't become excessively expensive. And on the fiscal policy side, the government provides subsidies for essential goods like rice and energy. For instance, in 2023, they allocate 1.8 billion USD to subsidize electricity costs, easing the financial burden on households. Stimulus program in 2023, 50 billion economic stimulus package was launched to support household and business. So, in the conclusion, inflation in Thailand has significant economic and sectoral impact. While the government can take various steps to manage inflation, it remains a challenging issue. By using a mix of monetary and fiscal policies, Thailand aims to keep inflation at manageable level and target inflation within 1 to 3% to ensure economic stability. Thank you.
In conclusion, inflation in Thailand in 2024 remaining below the Bank of Thailand's BOT target range of 1% to 3%, reflecting weak domestic demand and stable global energy price. The annual inflation rate peaked at 0.9% in November, signifying continued economic challenge include weak consumer spending and global disinflationary pressure. In response, the BOT implemented a 25 basis point rate cut in October, reducing the policy rate to 2.25%. This move aimed to stimulate economic growth and steering inflation back within the target. However, the persistently low inflation highlighted the difficulty of balancing growth with price stability, as monetary policy alone struggle to fuel demand. Looking forward, Thailand faced the challenge of aligning fiscal and monetary policy to restore economic momentum. Complementary measures such as government spending and structural reform are important to strengthen domestic consumption, fostering investment and achieving sustainable growth in the global uncertain environment. Thank you.